And joining us now to discuss Bitcoin news and more is Jesse Proudman, co-founder and CEO of SEC-registered crypto robo-advisor Makara. Hi there, Jesse. So just taking a look at Bitcoin's movements, over the past 24 hours, it fluctuated between 59 and 63. Now it's pushing through that $63,000 threshold. Where do you see it going short term?
Yeah, absolutely. Thanks for having me today. I think Q4 has always been an exciting time for this asset class, and certainly a significant number of positive quarters in the duration of the history. Last week, with the launch of these ETFs, I think really demonstrated that there is demand for simpler ways to access this asset class. I think for most, it's still too complicated and confusing and challenging to allocate to. And so simplified products like these ETF offerings really provide an avenue for new market participants to join in.
Do you have a price target or forecast for the end of the year for Bitcoin?
Based on what we're seeing with the interest with these ETF launches, with the rates of participation in large corporations in new product launches and the like, we feel like it is a very positive sign for price appreciation in the quarter. We don't set price targets, but I feel like it will be a positive quarter.
All right. And are you advising clients to buy into these Bitcoin Futures ETF? I understand that it's not the best investment considering the premiums involved. Better to buy Bitcoin.
Yeah, it's a pretty funny product. And it's interesting to me that the SEC approved this over a spot held offering. There's a number of challenges with these futures-based products, mostly around sort of the return stream and how that's impacted by the use of futures. So these futures products, they have to be rolled over every month. And the process in doing that adds fees to the holdings. And so the return stream can be reduced in a pretty significant way. I think ProShares estimates that their annualized rollings will cost 2.5% a year. But if you look at the actual data, it looks like it can be as high as 17% a year. You also end up with some interesting changes in price. So like GBTC is up 5% today, commensurate with Bitcoin. But the two ETFs, the futures ETFs, are up about 3.5%. So they don't track the actual underlying asset. They're sort of these synthetic wrappers that don't actually get you true exposure to the asset class.
So we had ProShares launch last week, as well as Valkyrie Investments, their iteration of a Bitcoin Futures ETF. Tomorrow, we're expecting VanEck. I don't know if you got a chance to look at the three, but, if you were to compare and contrast, what do you think is the better one to go into?
Yeah, I mean, I think it's pretty funny, and we'll see probably a few more launch here. It's a bit like having 7 different Bitcoins. They're all effectively doing the same thing. I think ProShares will say that they are actively managing the futures rollover, but that means they're basically picking which day they're going to roll over at the end of the month. The VanEck product is coming in at 65 basis points versus 95 basis points in fees for the Valkyrie and ProShares offering. So there's definitely going to be sort of a race to the bottom from a fee perspective, but it's hard to differentiate on any of these actual underlying products. They're all effectively doing the same thing.
Right. But it appears, though, that the first mover advantage is really having a great impact on ProShares. And do you see that continuing just because of that first entry into the market?
For a commodity product like this, I think fees ultimately become the biggest driver. And so as VanEck launches soon, I don't think the data's been set yet, but I would imagine we will see volume transition given that they are charging a pretty significant reduction in fees. And these products are all so similar that it's hard to really differentiate one product from another outside of the fees that they charge.
Can you go over some of the pros and cons of investing in a Bitcoin Futures ETF? You mentioned some already, but I believe, volatility is another one, the arbitrage risk, as well as the limited trading hours.
Yeah, I mean, these products, wrapping sort of Bitcoin and crypto offerings, which are 24/7 volatile products, into Wall Street wrappers, which trade 9 to 5 banker hours, creates some interesting challenges. And if you look at the volatility in the crypto markets, the majority of the large movements happen after hours. With March 12th of 2020, with the big drop down to $4,000, that was after hours. May of this year, there was a large drop, that was after hours. And so these products, as ETFs traded on traditional exchanges and brokerages, they don't permit access to trade in those big movements. So you can't buy if you want to buy low, and you can't sell if you're trying to get out. So that's one big consideration. that really makes them less favorable than buying traditional spot Bitcoin.
So what are you advising your clients to do? Are you advising them to stay away from these Bitcoin futures ETFs?
I think there are simpler ways for people to access Bitcoin that are not sort of wrapped in these Wall Street offerings. There are,
but the thing is, some people don't have a choice. Like they can only they can't get Bitcoin exposure
because of their regulatory considerations.
Right. So
these products are great in that they provide access to 401ks or other large regulated institutions. But if you look at a lot of the data, it seems to indicate that a lot of the initial participation is actually coming from retail traders. And I think those retail traders don't understand sort of the limitations and the fee considerations with these particular products. So it's just something to be cognizant of. There are better ways to gain access to Bitcoin than these particular products.
Yeah, interesting about the retail traders. All right. Another one I wanted to touch on was Tesla stock is hitting $1 trillion market cap for the first time, trading over $1,000. In the first quarter of 2021, Tesla invested $1.5 billion in Bitcoin and has been used as a proxy for some to get some sort of Bitcoin exposure. In their last quarterly SEC filing, they said no Bitcoin was sold and that they may in the future, quote, restart the practice of transacting in digital assets for their products and services. So do you think people are still investing in Bitcoin as a proxy, or is that now going to be funneled into these ETF products?
Yeah, I know. I think there's been interesting stocks like Tesla, like MicroStrategy, that really have acted as that proxy for funds or other firms that haven't had access to be able to buy spot Bitcoin to use as that proxy. I don't think that's applicable anymore given these other products. Again, I think there are better ways to gain access than using a company like Tesla. Now, I think Tesla is interesting in that you've got sort of this fascinating business with interesting and compelling fundamentals combined with its exposure to digital assets. So it can give you sort of a 1-2 advantage above just buying and holding a Bitcoin. But using it as a straight proxy doesn't seem like the best choice anymore.